Hello traders, you are welcome to my channel once again. I just got a DM and I was asked to touch on how to use Fibonacci Retracement Tool. It's a technical tool, as we are all aware, that really help traders to identify the areas where they can easily place their entry and the level where they should be expecting a retracement and a level where they can take their profit. So it's a it's an essential tool. Even though I'm not feeling fine with the DM, I quickly just take it upon myself to just touch on this very fast because I know it's an essential tool. All right. So Fibonacci retracement tool basically is a tool, like I said, that help trader to determine, where the retracement will end and a level where they are expecting to, you know, place their order and where they need to take their profits. We have some levels in Fibonacci retracement tool. And I will be showing you the practical aspect so that so that you can just grab it very fast. So right now I'm going to pull up my Fibonacci tool. I already have it here in my favorite list of tool that I use. Okay, this is how it is. Okay, let me just And before I even plot the tool, I would like to remind us that it's a tool that you use for a trending market, not a sideways market, not a consolidation market. A market that is consolidating, so you cannot use Fibonacci retracement to to trade the market that is consolidating. So it's only used for trending market, whether it's uptrend or downtrend. So right now, let me pull up my Fibonacci tool so that you can see. Okay. For example, here you can see that this this very one here is a bullish trend like this to this place. Okay, and thereafter it comes from here down. Right. One moment. After this retracement, you see a push to the downside, right? Okay, so how do you get involved in this with your tool? I'm going to show us right now. You just pull out your Fibonacci tool, place it here. This is where the price action finds the resistance. You are going down, then come and put the 0% at this very point. Okay, basically, what we see, the numbers we see are the 100%, the 78.6, the 61.8, 50%, 38.20, 23.60, and 0.00. Then we have negative 27, then we have negative 61.8. So the 0.000%, this one is the lowest point in the choosing price range. It's just a lowest point in the choosing price range. All these are range, but this is the lowest price of the range. Then we have the 23.60, the 23.60, which signifies a minor pullback before a continuation will happen. What do I mean by that? Trend is coming like this, He pulled back a little up to this point. He found a resistance. He found a support because this is a bearish trend. He found a support. Then he now starts with the underlying trend. Then we have another one that is 38.20. This 38.20 is often watched closely by traders to suggest a significant retracement. Okay, and once price gets up to this point, let's say for example it's coming down, it got to this point, it retrace. As it's retracing, it gets to this place, it found a support because it's a bearish trend. It found a support, then before it will resume the underlying trend. Then we have the 50%. All right, the 50% indicate a halfway retracement of the initial move. So when there's a move, when it's retracing, it will retrace up to the 50% of this length from here to this point. All right, this is a move. Then before the retracement. So if you retrace up to this 50%, that means this length, the 50% is a half of it. So it often indicate a halfway retracement of the initial or the previous move, and we have the 61.8%, which often referred as the golden ratio, the golden level. You know, it's a key fib level that is considered a strong area of support and resistance. So anytime there's a push and there's the corrective phase is happening, you know, usually price action finds a support or a resistance at this level, as the case may be. If it is a bearish trend, when it's coming down like this, that means it will find support before it will resume on the underlying trend. Then we have the 78.60. The 78.60, this is a very deep retracement. It indicates a deep retracement, suggesting a strong potential for a reversal. So when it retraced up to this point, if it did not find support here and pass through this place and get to this place, it still did not find support, then by the time it gets to this place, it's expected to find a support or a resistance before it resume the underlying trend. And if that did not happen, the final bus stop, which I normally call it, is the 100%. That means it will retrace up to the 100% where this move started. Okay, that means it's going to complete the cycle. It's a push phase, then the retracement phase we end at 100%. But if it breaks and take this high, meaning that the trend is about to change. But usually, the retracement, usually if it is a deep retracement, after just at this 100%, it will find a support or a resistance before it will resume the underlying trend. Now, this is one thing about traders that are professionals, you know, and this is where this tool, Fibonacci tool, comes in. So maybe for example, in the morning you open your chart and price action is somewhere here. All right. Let me just do something. Okay, price back to let's bring price back to let's bring price back to this point. Let me activate my let's bring price back to this point. Okay, up to this point. Okay. let's assume you open your chart and price is here. All right, what you need to do is allow it to play a little, allow price to play. You see, you can see, then you stop it. No, let me just use my replay tool again. Okay, you move a little, and again, by the time it starts to turn, okay, by the time it start to turn like this, let's say you woke up and this is price, you see price like this, what you need to do is bring out your fib tool. Bring out your fib tool, start from here, plot your fib. From here where it ends, you see this place, it found a resistance here. Now it's not coming down. By the time it gets here, you see it's making a pullback. So all you need to do is bring out your fib. This is 100% at the top, then stretch it and put the 0.0% at the level where it started the retracement. So what you should be expecting here now, between this 23.6, 38.20, 50%, 61.8, 78.60, this is where you should be expecting price to get to before you resume the underlying trade. Now, smart trader, this is how they trade. Now, let's say, for example, you are very busy and you don't want to wait for the cycle to complete, before you place your entry. So, what you do, is that this an advanced trading anyway. I'm still going to touch on that. You place what we call a market order. Okay, a market order is an order you place when price finally gets to that level. The order will be filled and you will be in the trade, even if you are not there physically. So one of such is that, like, as price is coming down like this, and there is a retracement, all you need to do is you place a sell limit order. Okay, you place a sell limit order. All right, but if it's going up, you place a buy limit order. Now, a sell limit order is a pending order to go short. What I mean going short, to sell at a price higher than the current marketplace. Okay, now I will explain. I will explain. All right. Now let's assume price is coming down here. Price is coming down. All right. Now it's retracing. That means the price is going down. But because you are not physically here, you don't want to sit and watch your chart to get for this price, for this retracement to be complete before you place your entry. All you need to do is that you set or place a pending order. So that is the order. Now at this point, what you need to do is you place a sell limit order, which is an order to buy higher, you know, to buy higher, all right, to buy higher, to buy higher at a price higher than the current price. Okay, price is here, right? Oh, okay, let me bring my tool. Okay, let's assume price is here and let's do it a little. Okay, price is here right now. Okay, and you are busy and you see that this is a retracement. You are able to identify that this is a retracement. You have already plotted your fib, and you know that price will find a support around this fib level. All right. So all you need to do is just you come up, you come here, and bring out your tool. You just okay. let me use this golden level as an example. Do it like this. Okay, put your this thing at the top of the structure, your stop loss at the top of the structure. Place your entry will be here. So we 1.08656 will be here. Then put your stop loss here at 1.09829. Then your take profit will be negative 61.80. All right, like I told us in Fibonacci 2, negative 27.0, it's a take profit level, and negative 61.8 is also a take profit level. So I told us that Fibonacci 2 can help us to identify a point where we can place our entry or place a pending order. Then, and it can also help us to identify areas where we take our profit. So it's a very nice and good tool to use. All traders, every traders, as a professional trader, you must know how to use it because it's one of the best tools that you ever need as a trader. So all you need to do is just place your order. You just go about your normal daily hustle, or maybe you want to take a walk and all that. You don't want to sit in the front of your chart and watch the retracement, to finish the move and all that. But you have already, set your uh, sell limit order, you know, and as soon as price, for example, price get to this point, what happen? Once you get like this, he has already triggered the order and you see price coming down. You see, you see price coming down. All right. You see, because price action did not, it cannot just, come and just keep going down like that. It will always rigmarole, right? And so that is just the thing. So guys, you can now see if at the end of the day, price will come and hit our take profit. If you put your take profit as remember I told us I said negative 27 is a place where you take your uh, profit. So me personally, what I do is I always go with negative 27.0. Negative 27.0 is a really level where you should always take your profit because negative 61.80, sometimes it takes time before price will hit your profit level. All right. But negative 27.0 is always a perfect place where you should take your profit. So that is it, guys. And another way is that when price action is trending up, when it's trending up, so what you need to do is bring your fib like this, and bring your fib, come down. This is where there is a retracement like this, a little retracement. Then your 100% down here, your 0.0% up where the retracement starts. Then you put your take profit at negative 61.8. So guys, that is how Fibonacci retracement tool is being used. So if you like this video and you have uh, any comment, you can drop it at the comment section. I thank you guys, and I see you again at the next episode. Thank you for watching.